All right, everybody. Today I'm going to talk about what is an S corp and why do people talk about it. You probably see it on Twitter, on your Instagram, and all this stuff from a lot of influencers, so on and so forth. And so you're probably wanting to know, why do people do it? So I'll give you my thoughts from a CPA's perspective. I do have a later video that also talks about some of the considerations that you need to make before you decide whether or not you want to switch to it, because there are considerations. Today I'm just going to cover the basics. So before I go any further, the four simple things I want you to do if you enjoy my content: like this video, subscribe to the channel, share it with your friends, and then hit the bell so you get alerted when I release new videos. So what I want to focus on right now is S corps. And S corps, they are passed through. Oh, entities. Here's what this means. This means the income comes in to the S corp, and then it passes through to you. It passes through to you. It does not stay in here. So your profit and loss, and this marker's terrible. Your profit and loss here it passes directly to you. Does not stay in this S corp. So the S corp, there's rare circumstances they could pay tax, but generally they don't pay tax. They go straight to you. And so that's what you have to remember, is this is why it's a pass-through entity. You cannot have any more. I can't even write the 2. That's pretty sad. It has to be less than or equal to 100 shareholders. That's the case. Like, you cannot have more than 100. I mean, think like a partnership. You can't have, you can have as many partners as you want. Shareholders of an S corp are kind of like analogous to that. You cannot have more than 100. So, and then there are limits, and I don't have this off the top of my head, of what type of partners you can have. Like, you can't have like foreigners, stuff like that. So you have to be very careful about who the partners are inside of an S corp. The other thing to consider is, generally you'll have to be an LLC, to become an S corp. You can be a corporation for legal purposes and then register as an S corp, or most people are LLCs and then they become an S corp. You'll file Form 2553. That's how you'll do it. You need to sit with your CPA, make sure you want to make that election, but that election will tell the IRS, hey, I want to be treated as an S corp. So those are the kind of the very bare bones of S corps. But here's why people do it. And I'm not going into the pitfalls. I'm just telling you why people do it. Why S corp? Okay, so when you work a job and you work a 9 to 5, you pay income taxes and you pay payroll taxes. Now these payroll taxes, and that marker is not showing up very well, so I am sorry about that. You pay the payroll taxes, you're paying FICA, and you're paying Medicare. So you're gonna pay 6.2% of your wages. And I think it's $147K this year. I think it's the limit. So the first $147,000 of income you're gonna make, you're gonna get hit with this 6.2% tax. And then you have a 1.45% Medicare tax. That is on all of your income. And then I think above 200,000, there's a additional 0.9% tax that gets added to this. But what you don't see, and this is what you don't see, is you you, employer, the total tax is 15.2%. You're paying half. You're paying half. Your employer pays half. You don't see that come out of your paycheck. You don't see the employer's portion. Now, could we argue that that's probably reflected in your wages? Yeah, probably, because they know obviously if they give you a raise, it increases their portion of Social Security. So it's more than, if they give you a 5% raise, whatever, it's going to increase their burden on their tax burden also. Not only they have to pay you more, they also have to cover more FICA for you. So that does enter into it. But at the end of the day, you don't see that. The only thing you're seeing out of your paycheck is this. Now, when you're self-employed, like, this is you, you're self-employed. You have to pay the full 15.2%. So there you go. You have to pay the full 15.2%. That's all you. So what ends up happening is a lot of people don't forget this, and then when they and this isn't not even in considering income tax. You have to pay this in addition to the income tax. So this can really mess you up if you're not careful. And so what I like to do, and we'll illustrate this, is let's use an example. Let's say you have a LLC that is taxed like sole proprietor. Now, if you're confused at what I said there, basically what I'm saying is your tax, like you report it on a Schedule C on your 1040. Like you for legal purposes, you're an LLC. For tax purposes, you're treated as a sole proprietor. And people get this mixed up. LLC is a legal construct. It doesn't affect you for taxes. Some states it can, but for tax, if you go and you start as a sole proprietor, means you just start saying, hey, I'm going to be in business. I'm going to start selling right now. That doesn't change anything. It's when and even if you say I'm going to become an LLC, it doesn't change anything. For legal purposes, doesn't change anything. It's when you make an election on taxes, like you can say, hey, I want to be taxed as a corporation. I want to be taxed as an S Corp. You can do that. But again, by default, this is what happens. So let's say you make 100,000 profit. And I'm not going to focus on income taxes because that doesn't change. What changes is your payroll taxes. You're going to pay $15,200 in payroll taxes. How did I get that number? It's 15.2% because you will be paying the full Social Security on that entire profit. So you will be paying $15,200 in taxes. And that's in addition to the income tax that you'll have to pay on that. Now, how much income tax? It depends on your other sources of income that flow into your return, but you will pay this amount. So now let's change this to S Corp. So now we have an S Corp, $100,000 of profit. But you look and you do wage studies, and you need to do a wage study or get your research you have to pick a reasonable wage. You cannot sit here and pick some lowball number because the IRS is going to be onto that. You need to have support for the wage that you pick. So let's say a typical person that does what you do makes $50,000 a year. So what you do then is you will pay, the beauty is you're going to pay self-employment only on this amount. So you're going to pay 50,000 times 15.2%, which is going to be $7,600. Okay. The rest of that money is going to get passed to you as a basically like a dividend, like as a distribution. So you won't pay that payroll tax on there. So what in essence happened is you saved You save $7,600 with that change. Now, does that tell the whole story? Absolutely not, because you, and I talk about this in my future video, and you'll need to watch, but you need to consider state tax considerations. There may be additional state taxes that you have to pay. There's also additional preparation fees because you're required to file another return, and those could be $1,000 or plus dollars. Payroll processing fees, that's going to eat into that. So you're not getting the full $7,600. You're going to get less. And as you can see, if these numbers were cut in half, in other words, you only had $50,000 of profit, these savings are really going to start to dwindle. And basically, it's going to be nearly a wash when you factor in the cost of the return and stuff. And so this simple illustration shows that point. Is, if I cut these in half, your savings will only be what? If I had $50,000 a year here and 25 for the profit, and I did that example and ran it, I mean, we cut this number in half, and so you're looking at what, 3,800, which is still a lot, but it really goes down when you start factoring the cost to prepare the return and all that other stuff. So at the end of the day, you need to run these numbers. It needs to be worth it for you from a cost benefit standpoint to be able to do this. So again, this is the big appeal to S Corps. And this is why a lot of people decide to go with them, is because of the tax savings with self-employment. So hopefully you got a lot of value out of this video. If you have any comments, please leave them down there in the comments. Follow me on Instagram at mdeepcpa or on Twitter at mdeep_CPA. And if you have questions, leave them there. You all have a